Welcome to this week's edition of IPO This Week, where we're looking at 4 companies going public this last full week of May, and that includes the very popular online job site, ZipRecruiter. As always, I want to thank all of you in the community for checking in and always supporting the channel by being generous with a like button, sharing your thoughts and updates in the comments, and even sharing the videos with your friends. And as interest in IPOs continue to decline, please make sure to let me know you still enjoy watching these videos. And you can do that simply with a push of the like button or a comment. And then, for anyone new here, my name is Kevin, and I want to welcome you here for the first time. Definitely check out the video, and if you end up liking it, and in the spirit of ZipRecruiter, I'd like to recruit you to become a part of our community. After all, it's totally free, and by subscribing and turning on the notification bell, you'll make sure you don't miss any upcoming videos. So let's get to the task at hand. And again, this week we have 4 companies coming out, meaning I have 4 companies to talk about, including 3 traditional IPOs and 1 direct listing that I'll give you some overviews on and details on when we can expect them to trade, their IPO prices, and of course the ticker symbols to find them. And as I go through the list, let me know which ones you're most interested in, because if you've been with me long enough, you know the companies with the most interest tend to get the more dedicated and in-depth videos. Palantir. Oh, excuse me. Alright, so up first we have a company named FIGS. FIGS uses a direct-to-consumer approach to sell healthcare apparel for healthcare professionals. And their approach is to create clothing that focuses on comfort, durability, function, and style, all at an affordable price. Ultimately, what they've done is branded a previously unbranded industry, basically taking common, everyday scrubs and creating premium products for healthcare professionals. And at this point, they claim to have become the industry's category-defining healthcare apparel and lifestyle brand. And they've done this by marketing and selling 98% of their products through the digital platform, which consists of their website and mobile app, to a rapidly growing base of loyal customers. From 2017 to 2020, they've increased net revenues from $17.6 million to $263.1 million, representing a compound annual growth rate of 146%. And in the most recent year-over-year period, they grew net revenues from $110.5 million in 2019 to $263.1 million last year, representing 130% year-over-year growth. And they've also improved net income from less than $1 million in 2019 to over $49 million in 2020. As for details of the IPO as of this recording, the FIGS IPO looks at price between $16 and $19. FIGS stock is then expected to start trading on Thursday, May 27th, under the symbol, you got it, FIGS, F-I-G-S. Okay, moving on. The last 3 companies we're going to talk about are all expected to begin trading on the same day, Wednesday, May 26th. And the first of these Wednesday offerings is Paymentus, a company that provides cloud-based bill payment technology and solutions. The company claims to have more than 1,300 business clients in industries such as utilities, financial services, insurance, government, telecommunications, and healthcare. Their platform is developed on a single code base and leverages the software as a solutions infrastructure, allowing for rapid deployment of new features and tools to their customers. Paymentus supports electronic bill payments across multiple commerce channels, including online, mobile, interactive voice response, call center, chatbot, and voice-based assistance. One of their strategies for growth is to not charge development or implementation fees to their customers. Therefore, there is no minimum investment necessary for companies considering their service to come aboard. According to their IPO filing, the Paymentus platform was used by approximately 16 million consumers and businesses in North America in December 2020 to pay their bills. And then for some top-line financials, the company generated revenue of $235.8 million in 2019 and $301.8 million in 2020, representing a year-over-year increase of 28%. Along with the rate of growth, another thing to like is that they are profitable, as they've reported net income of $13.7 million in both 2019 and 2020. The Paymentus IPO looks at price between $19 to $21, with trading to begin on Wednesday. Paymentus stock can be found and traded under the symbol PAY. Next up is another financial technology company, this one named Flywire. Flywire claims to be a leading global payments enablement and software company that serves over 2,200 clients around the world, focusing on organizations in the industries of education, healthcare, and travel, where they tailor payment processes that are specific to those particular industries. To break that down a little bit, in education alone, they serve over 1,900 institutions and 1.6 million students throughout the world. And then in healthcare, they serve more than 80 healthcare systems, including 4 of the top 10 systems in the United States, as ranked by hospital size. In their newer vertical areas of travel and B2B payments, they report having a growing portfolio of more than 200 clients. And for some stats, in 2020, Flywire enabled over $7.5 billion of total payment volume across more than 130 currencies. And starting off this year, in the 3 months ended March 31st, they enabled approximately $2.9 billion of total payment volume, suggesting that they are at a pace that significantly outperformed last year's total. And then for some financials, the company generated revenue of $131.8 million in 2020, up from $94.9 million in 2019. However, the company remains unprofitable, with net losses of $20.1 million in 2019, decreasing to $11.1 million last year, so it's good to see them trending in the right way, but again, still not making a profit. As far as the Flywire IPO itself goes, it looks at price between $22 and $24. Shares of Flywire stock will trade under the symbol FLYW. And once again, trading looks to begin on Wednesday. Finishing up this week's list, we have a direct listing from undoubtedly the most familiar name on the list, online employment marketplace ZipRecruiter, where they describe themselves as a matchmaker for people looking for jobs and employers. Since the founding of the company in 2010, over 2.8 million businesses and 110 million job seekers have come to ZipRecruiter for their hiring and job search needs. I'm guessing quite a few of you out there have tried the site at one time or another. And I say that because, based on rating information from Google Play and Apple's App Store, ZipRecruiter has been the #1 rated job seeker app on iOS and Android for the past 4 years, in comparison with their primary competitors, which include CareerBuilder, Craigslist, Glassdoor, Indeed, LinkedIn, and Monster. Lots of names you heard of, right? Some with even more familiar names. So with that competition, you have to look at ZipRecruiter and see if they have the vision, the strategy, and the execution that can outperform the competition in the long run. And you also probably should consider how big the market opportunity is. So according to their prospectus, ZipRecruiter says that 20% of working Americans, which comes to over 40 million people, change jobs every year. And then more than half of currently working employees are either actively searching for new jobs or at least passively exploring new career opportunities. And from a generational perspective, and probably not surprising, employees are changing jobs faster. Again, according to ZipRecruiter's filing, the median tenure of millennials at a single organization is now 2.8 years, down from a median of 10 years for the baby boomer generation of employees. So with that background, let's look at the financial numbers. ZipRecruiter reported revenue of $429.6 million in 2019, and that actually declined to $418.1 million in 2020. You want to guess why? Well, of course, this was primarily related to the pandemic and the widespread impact it had on the workforce. Now, the good news from a financial perspective is that while they generated a net loss of $6.3 million in 2019, they moved out of the red in 2020 with net income of $86 million. So as I mentioned before, this is a ZipRecruiter direct listing, not a ZipRecruiter IPO, which means that there are no new shares being created and bought before public trading, and therefore there is no IPO pricing range released. And as of this recording, we don't have a reference price either. Now, if you're unsure of what any of this means or what makes a direct listing different from a traditional IPO, check out the video that I made that talks about what direct listings are. I'll link it for you in the description. Now, what I do have for you as of this recording is that ZipRecruiter will trade under the ticker symbol ZIP, Z-I-P. And we do anticipate ZipRecruiter stock to start trading on Wednesday, May 26th. Okay, so there's the list. What do you think? Are you looking to buy into any of these companies? Let us know in the comments. So I hope you enjoyed the video, and if you did, again, please press that like button and share with your friends and on any of your social media sites and forums you're on. And if you're new to the channel, or just an occasional visitor, we'd love to have you join the community. Again, it's totally free. You just gotta press that red subscribe button. We'd love to have you on board. So until next time, thank you for watching and have a great day.